Hey everybody, hey traders, happy Sunday. This is pre-market stuff. This is Sunday the 21st, but I want to release this video out to the ACAP community and anyone watching, traders and investors. We have a pretty big earnings week this week. We've been just kicking things off with 30 companies and 50 companies. This week we have over 200 companies reporting earnings and some big notables. We also had a holiday week, but Tuesday through Friday the markets were cranking to the upside, bullish Wednesday, Thursday, Friday, and strong. We officially have marked all-time highs on the S&P, the Dow Jones, once again eclipsing those highs, and the Nasdaq eclipsing highs. So the melt up continues. I really don't think that the markets right now are looking for a reason to fail or drop, despite the technicals. I mean, I'm personally, I took a little short position with an options play on the Dow Jones for a little post-Fed recovery. But here's the good thing. The Fed isn't until the 31st. I think right now the market continues to do its thing, continues to melt up, and then if there's going to be some cold water dumped on this hot little rally, I think that's going to be on January 31st and after if we see a bit of a correction or a stall in the market. So I wanted to point out some notables going into this week. We have United Airlines. I'm going to check some other ones, but United Airlines has earnings. Johnson & Johnson, D.R. Horton, which is a home builder, Netflix and Tesla, big watches this week. I will be looking to price out some trades on both of those. I think there's going to be some high volatility, and they're also big enough market cap wise that they, with a positive move or a negative move, could certainly impact the outlook for the next several days post earnings with those two prints. Comcast, Intel, Capital One, and Visa as well. Visa will be something we check on for the health of the consumer. I have one more slide here. So the Nasdaq led hard last week with a big rally. I had an options trade that would have cost me about $2 that was trading for about $10. An options trade that cost me $4.50 that was trading for $15. These are ridiculous gains in the options market, all because of good volatility on the Nasdaq and the QQQ. We had a hard push on Wednesday to Friday with the S&P 500. The SPY reached all-time highs for the first time in 2 years. We have big earnings ahead, like I said, and right now I think that the market is looking at the path of least resistance. We have some investor optimism. The consumer sentiment report from the U of M came out positive. I think for the most part right now, we have an election year, yes. We have some geopolitical, tensions and turmoils that right now have just been absorbed in the noise, and the market doesn't seem to focus on it or care about it too much. CPI data was not a huge shock or huge surprise, and it was really the lagging shelter that was the poke for a higher CPI or inflation data. So as far as we are seeing as the numbers, inflation is lower across the board, shelter is lagging. So we will see if housing prices continue to come down. The anticipated rate cut for the Fed is still happening in March, but we're going to see what that language looks like January 31st. So like I say here, the melt up continues. The wall of worry will continue to be climbed. But part of me thinks that the wall of worry is old news, right? Last year it was the market's going to go into recession. It's when is it going to crash? It hasn't, and it's showing its resiliency, and the economy is actually strumming right along. So I think that's a good thing going into this earnings season, where if companies continue to have solid reviews and they're beating estimates, I think the market's going to continue to rally. And what I'm watching for this week is big, large market cap companies like Tesla and like Netflix and others. So let's jump into the charts here. I'll take a look, and I want to look at some expectations. So here is the expectations for Netflix. It's coming out after market. That should be earnings report after market will be on Tuesday. So Tuesday after hours. And the estimates, we have a $2.20 earnings estimate with a revenue of $8.71 billion. If they beat that on both sides, let's look at the price here for Netflix. Let me go to this chart here and go to Netflix. So we're trading at 482. We've had some tight prices here the last little bit. Let me go to something like this. Let me change the color. So a little bit of that structure. I acknowledge this could be pinched off a little bit as far as a rising wedge. Let me zoom out a little bit, get a bigger context here on Netflix. So we've had a heck of a recovery since the lows at 162. We're all the way up to 482. That recovery from the lows in 2022 all the way up here, 196%. And Netflix position, in my opinion, just keeps getting stronger. We've had the split from Warner Brothers. We have Apple has a streaming service, Disney has a streaming service. You have Hulu, you have Amazon Prime, you have all these competitors. But one thing that remains pretty solid with Netflix is they are content kings. They have bought shows from other networks. They're doing more live sports events. I just saw that the new season of Breakpoint comes out, which is a big tennis following. I like that show. I think that's great. The Formula One series, the Full Swing series in golf. I think live sports, if they don't get live sports, they're going to do a lot more of the documentary series, which I think are pretty captivating and compelling. But like I said, content kings. And right now, I mean, what I like about this in the weekly chart is we have about 3 or 4 weeks of indecision. So what I'm hoping happens with earnings is based on the pricing. Let's see if I can look at the average here. So we've got a high around 504. We have a recent low around 461. That's about $20 to the upside and downside. And if I look at the average trading range on the weekly, see if I can find it here on this other chart that I consult. There we go. Let's go to Netflix here. I'm going to look at the earnings expectation. So there was the big lead by the Q, like I said, Wednesday, Thursday, Friday last week. Here's Netflix on the weekly chart. And we're looking at an average move on Netflix for around $26.25. So even if all I did on Netflix was come into the market, buy it and sell it, and look for an average move of $26, an earnings catalyst can certainly be $40 to $50. I think the estimates are fair that we should see volatility either snap higher, snap lower, gap higher, gap lower, and give us an opportunity to make some pretty good profit on Netflix with a big surprise one way or the other. Let's go to Option Slam. I've showed this in the last couple of videos. Let's go to Netflix and look at the averages here. All right, so we're looking at an average of around 10.46%. I would say, just to be on the safe side, I'm going to calculate this based on about 10%. So price is $482. You do a 10% move from there, you're looking at about $48. So $482.95 times 10%. We can even estimate lower than that. Let's say it moves about 75% of the earnings. That move was, let's go, $482.95 times 10% is 48. Take 75% of that move. You're looking at a $36 move. I still think between 26 and 36 would be a pretty big window that if we have everything priced out fair, look, if you bought Netflix as is with a $5 stop or sell it as is with a $5 stop, I think that's fair for a huge upside of $25 or $30, or maybe even a surprise to the upside. Some previous earnings history, if I go back into Netflix on the daily chart, I can see this big move here. This was a close of 346 and an open of 408. That's a $60 move. Previous earnings from here, we had a close of 477 and an open at 447. That's a $30 move. And the low of that next candle for the day was 432. So we have, if I can zoom in on this candle right here, we have an open at 476 to an open at 447. That's $30. Plus the push of that next candle goes down to a low at 432. That's over $40. So again, I mean, obviously earnings can be a bit of a toss-up, but I think that volatility and some optimism is out there that helps drive this. So I think to the upside, if we have a positive print for Netflix, I wouldn't be surprised if we get above $500. If we're trading at 482, we get above 500. 20 some dollars into it. If we have a nice surprise at 30, 40, $50, great. One thing I want to look at here with Option Slam as well is the post earnings move. If we have a gap open, higher, lower, and there's more to it, that's what I want to look for as well. So right here we have a 17% move, which is well beyond the average of 10 and change. So if we just had that alone, that's a great trade. Here's a -6 that pushes to 10.5 in 3 days. Here's a -2 that stays right about there. That's a bit of a miss. That would be a tough earnings play if we did that. 6 and change pushes 5 days later to 15%. That's beyond the average. 10% pushes to 13, past the average. 3 pushes to 9.3. 8 days later gets to 12.46. That's past the average. -29 blows through those highs, or the 10% average. -21 blows through those levels. Here's a 2 that flips around to a 4. That's a 6% move. That's shy of the average. But of all these right now, we have about 1, 2, 3 of the last 9 that have not gotten to that 10% level. So again, the timing of this, if I were to look out this week, And what I'm doing right now is I'm willing to go out a little bit further in time on some of these plays with these earnings because this week is all about earnings, but next week is all about the Fed. So if we have a nice run up or a nice melt up prior to the Fed on the 31st, I want to give these positions a chance to run and not cut them off too early as far as the time expectation. So with what I do with earnings plays and options, especially, I want to make sure that my timing is correct and I'm giving these moves enough time. So I think going back to this with 1, 3, 5, 8 days out, I'm probably going to look at that 5 to 10 day window before I start cutting off these trades, unless it's just a blowout move. If we have like a 15 to 20% move and it's well beyond my expected price point, and I'm up 3, 4, 5 times what I am risking on the original trade, then I'm probably going to take some profit. Okay, so Netflix is going to be a big one. One other one I want to highlight this week is going to be Tesla. Tesla should be Wednesday earnings. Let's double check the calendar here. Tesla Wednesday, let's find it. There's a big list of stocks for the week. I think it's after bell on Wednesday, but I'll confirm that here. There it is. So it's after bell on Wednesday. The expectation, let's go into earnings whisper. Let's go into Tesla. There we go. And the expectations, 0.74% is the earnings estimate on the earnings per share. Revenue estimate 23.17 billion. I know there's been some drama in the headlines for Elon Musk and Tesla, and the cost of a Tesla has come way down. In fact, it's interesting now. It's almost become this new indicator for the entire electric vehicle market, where major automakers are pulling back the assembly lines and reducing the fleets for these EVs and going more to gas. Just because they've seen the prices come so far down in Tesla, I feel like they can't do these EVs at the right price points. Also, gas prices have come down a lot from $100+ a barrel to now low 70s. So anyway, Tesla again, pretty volatile. The expectation, we have earnings history. Go back to the last 9 prints, we're looking at about 10+%. It gets 5% up to 10%. I think for the last, let's see, 1, 2, 3, 4, 5 prints, we've had 9 to 10%. I think it's safe. We can calculate this at a 10% move. We can look for the earnings afterwards, 1, 3, 5, 8 days out. Here is 7% pushes to 12 and change, 4% pushes to 10 and change, 8% pushes just close right at that 10 to 11% mark 8 days out, exceeds the 10%. This one was a miss where we were just shy of that, -6. It ends up staying right there. 3 pushes past 10 or gets to 10. 9 doesn't quite get there, but gets to -10. That's a 20% swing 8 days later. That's a big difference. -4.3 gets to 11 to the downside. That's a push past the average. -1 pushes to 18 5 days later. So I think if we give ourselves some time in that 5 to 8 day window, it's going to be more expensive depending on how you play this. If you're just buying the stock, it's much easier. Buy the stock, sell the stock, have a stop loss in, and let these profits run. If you're on the option side, like a lot of times I am with these earnings reports, I need to make sure I go out far enough that I can have enough time that I do pay for, but I have enough time to increase my probability of profit. So Netflix, Tesla, big focus this week. I will certainly play them. Traders in my trading rooms will be following along. I'll post this also on my YouTube channel and all the stuff that I do on social media. And if you're following me out there, great. My YouTube channel is youtube.com/Chris Pulver. ACAP's doing a fantastic job of sharing these videos out, and I hope you're finding them. And if you want to get in touch with me, great. Follow me on YouTube. Join my live session. You can join my Discord group for free. It's a free community where it's just a bunch of traders talking, stocks, options, futures, forex, cryptos, all that good stuff. All right. So that's it. It's just going to be mostly uninterrupted trading week, Monday to Friday. Big earnings. The melt up is still happening. I think that the market's path of least resistance still looks positive in my opinion. Yes, we breached the highs. We got to all-time highs. If there's any additional momentum behind that, because last week looked like market breadth-wise we're to the upside, I don't see this really turning aggressively south until a Fed meeting to talk it down. I think this is kind of a good thing where it gives us some open space to run, and the market's kind of optimistic right now. One last thing I can check here would be my AAII sentiment. This is just where investors' heads are at, what the overall mood of the market is. Currently, we're sitting, this is interesting, we're actually less bullish than we were a little bit ago. So last week's on the 17th, we had a print of 40.4 versus the week before that, we had 48.6. So possibly because we breached the all-time highs, maybe there's some more profit taking going on, or maybe that's the outlook. But consumer sentiment, like I said on Friday, also printed positive. Let me go back to last week here. So let's go last week, Friday. Friday we had universities. I mean, that's a big uptick, right? So if we look at the chart, we have a big jump in consumer sentiment. So for a while we were really in the pits, summer of 2022, started to slowly come back. We had that October bottom in 2022. 2023 for the most part was a big recovery year, and here we are, kicking off 2024 with a nice boost in sentiment. Again, the wall of worry I think is starting to dissipate. I think that the melt up continues, path of least resistance until there's other stuff to really grab the market and get a stranglehold on it, which might be inflation, might be central banks, taking back their dovishness. And I can end the video with this. It's been about 15 minutes, so I want to wrap this up pretty quickly. The watch tool is still the same. The high percentage move for January is the Fed is not going to cut rates. They're not going to do anything. Here's a 98% probability that the rate is just going to stay the same in the US. But what the language will be on the 31st is going to be interesting, because right now this has shifted. Okay, this is the current rate. This is crazy. Just last week when I did these videos, this has shifted. So the market right now is anticipating a pause instead of a rate cut coming in March. Now, how does this change, making this seem like the Fed's not going to be cutting rates and be a little bit more dovish, and yet the market's going to all-time highs? Interesting. So maybe proceed with a little bit of caution, but like I said, the Fed's not until the 31st. That language and that confirmation and that affirmation from Jerome Powell won't really be into the markets and being digested until the 31st. So if we have solid earnings, solid forward guidance, the mood is high right now, I think this is a good sign. But guess what? I'm going to play it both ways to be safe, make sure I have defined risk where I can let my profits run, cut off my losers quickly, and that's how I trade earnings. Okay, so I'll let you go there. It's been right around 15, 16 minutes. Thanks for watching. Happy trading lots of profits. This is Chris Pulver. Talk to you soon. Thanks.